Hello everyone. So today we'll talk about the topic, should you invest in Sula Vineyards? So every business boils down to three aspects: people, product and business. And in my opinion, in this order. Hence, let's start with people. People. The hustling and fast life of Bombay is the birthplace of Rajiv Samant, while approximately 200 kilometers from there laid the calmer city of Nasik, which could later fulfill his entrepreneurial dreams. Rajiv Samant's introduction to wines took place during his early years studying at Stanford University and working at Oracle in California. Neither grapes nor wine were at the top of his mind when he returned to India in the early 90s. He then visited Nasik, a region well known for growing table grapes. This was in 1994, and this led to an idea. He began pursuing the idea of growing wine grapes in Nasik. He spent about 3 months of his time in California into a winery that belonged to his friend and mentor and now Sula's master winemaker, Kerry Dembski. While working for Kerry, he got a great idea about the world of wines, and in 1996 he established Sula Vineyards. The name Sula, by the way, came from his mother Sulabha and symbolized the rich and Indian heritage of his wines. Interesting fact, Rajiv, who is also the promoter of Sula Vineyard, is entitled to the following remunerations: base salary 1.9 crores per annum, variable compensation of 2.5% of company's profit after tax. All in 2022, he received an aggregate compensation of close to 3 crores. Now let's come to product. Sula's product portfolio consists of two types of wine: still wine and sparkling wine. Still wine, wine that is neither sparkling nor fortified. Still wine constituted of about 87% of their total production as of March 2022. Sparkling wine is a wine that contains bubbles from dissolved carbon dioxide. Sparkling wine constituted about 13% of their overall production as of end of March 2022. Within the still and sparkling wines that they produce, three different types of versions are red, white and rosé. As of March 31st, 2022, they had 56 domestic wine labels. Interesting fact, the main difference between still and sparkling wine is still wine is a wine that is not effervescent or fizzy or sparkling, while sparkling wine contains significant levels of carbon dioxide that causes it to be fizzy or sparkly. It is further important to note that not all sparkling wine is considered champagne. The term champagne has been reserved to identify sparkling wine that is produced in the Champagne region of France by the Champagne method. There are 4 different types of categories of wines that Sula produce. Popular are the ones, those are below 400 rupees per bottle. Economy, that is 400 to 700, premium from 700 to 950, and the elite ones which cost over 950 rupees per bottle. Majority of the labels come under 2 packages, 750 ml and 375 ml, while a few labels also come in packages of 180 ml, 1000 ml and 1500 ml. Sula also imports imported wines from Russia, red and white wine from Australia, red and rosé from France, and red, white and rosé from Spain. Now let's look at the market for a bit. In Italy, 50% of the alcohol beverage that is drunk by people are wine. In USA, this is 14% only. In China, it's 3.7%, and in India, it's very low, which is around 0.2%. India is a heavy spirit drinker. We like a lot of spirits such as Jameson, whiskey, single malt, so on and so forth. The second part of their product is wine tourism. Wine tourism, also known as enotourism, is about visiting the vineyards, tasting wines, and even taking part in harvest, leading to tasting, consumption and purchase of wine while taking an active part in the process of grape stomping. USA saw around 2.7 crores of people in wine tourism in FY 2020. Italy saw 50 lakh people in FY 2020 as part of their wine tourism, whereas Sula saw only 3.7 lakh people as part of their wine tourism experience. Sula started the first tasting room in 2005, and now more than 3.5 lakh people visit Sula to indulge in wine tourism. Sula opened the country's first vineyard resort in 2008, which further established Sula's leadership. Sula started the Sula Fest, the pioneering vineyard music festival in 2008, which became one of the most sought after food and music events in the country. Now let's look after the business aspect of. For business, I look for three things: revenue, growth in revenue, and ROIC. Let's tackle each of these one by one. Revenue. India drinks about 1 billion cases of alcohol beverages in India, and in terms of value, that corresponds to about 2.5 lakh crore or 33 billion, whereas the wine industry is only about 2 million cases, that is 0.2%, and in terms of value, only 1500 crores out of the 2.5 lakh crores. 80% of this is controlled by top 3 players in this industry: Sula, Grover Zampa, and Fratelli. Sula's revenue is 400 crores annually, and it commands almost 60% of the organized market share. As you can see from the image below, Sula's wine business has not been growing very rapidly. In fact, in 2020, they had about 493 crores of revenue from wine business, and in 2020, it dropped to about close to 400 crores, and in 2022, it again jumped back slightly to about 416 crores. Majority of the wine that is sold by Sula is sold via the premium category. Prices for these bottles ranges between 700 and 950 rupees. One needs to ask whether the market for wines is saturated. Let's check the data on wine consumption for the last decade. India has moved from 1.6 million cases in 2010 to 2 million cases in 2022. That is less than 2% CAGR in terms of volume. Such a meager volume growth may imply one of two things: India is in general drinking less alcohol beverage, or India is drinking less wine. India's overall drinking volume went from 730 million cases to about a billion cases at a CAGR of 2.7%. Hence, we can infer that wine market is growing slower than the overall market in terms of volume. Let's check why the wine market is growing slower than the overall market in terms of volume. Simple. India is not a fan of wine. 59% of the alcohol consumption happens via spirits, whereas 41% happens via beer, and only 0.2% happens via wine. And the trend has not changed since the last 2 decades. Let's look at the second aspect of the business: growth in revenues. In the last 10 years, Sula's revenue increased 13.7%. The majority of the increase is due to the increase in the price of the wine sold, or by selling premium wines, and not by increasing the volumes of cases sold. Whereas the companies that sell more alcohol beverage choice, Pernod Ricard, Redigo Khaitan, witnessed a growth of 21% and 20% respectively on an already very large base of 2500 annual revenue, which is 6x of Sula's annual revenue. The last part of it is ROIC. ROIC has to be greater than the cost of capital, and the higher it is, the better. Cost of capital simply is the percentage at which the company is getting the funds to run its operations. Debt generally ranges between 9 to 12%, whereas cost of capital surveyed by EY and NSE in India in 2021 showed that India's average cost of equity is around 14%. So we can safely assume that Sula's cost of capital can be around 12 to 13%. The ROIC of Sula, as checked from their balance sheets and annual reports, ranges between 12 to 15%, and thus it is not very lucrative. It's not much higher than the cost of capital, and therefore wine business overall for Sula is not very lucrative. And that is why from all the 3 aspects of the business, revenue being significantly low, growth in revenue not that exciting, and ROIC also not significantly higher than cost of capital, Sula does not seems to be doing good on business. Let's see how the competition is doing. So the key players in India alcohol beverage market are spirits, where companies such as Diageo India, Pernod Ricard, Redigo Khaitan, Allied Blenders, etc. sell brands such as Royal Challenger, Signature, VAT 69, Blenders Pride, 100 Pipers, Valentine, Chivas, etc. etc. Then you have the beer market, where United Breweries, Bira 91, Carlsberg, Anheuser-Busch, etc. sell brands such as Kingfisher, Budweiser, Bira White, Carlsberg, Tuborg, etc. etc. And then you have the wine industry, where you have 3 major players who basically command up to 80% of the organized market share, and these 3 companies are Sula, Grover Zampa, and Fratelli. As you can check the gross sales growth for private and public listed players from the below chart, you will see that there is significantly higher growth for spirit section for companies such as Pernod Ricard, Radico Khaitan at above 20%, whereas Sula commands a meager 13.7 or 14% of CAGR in the last 10 years. In the wine industry, area under cultivation is one of the most important things to not just check the supply but also the demand for a particular company's wines. Sula commands 2600 plus acres of area under cultivation. Fratelli Wines commands 240 acres of area under cultivation, whereas Grover Vineyards command up to more than 410 acres of area under cultivation. All of them are situated in the Nasik region in Maharashtra. Segment-wise presence of key wine players, Sula again triumphs in the count of labels in all the categories. So, finally the question, why the IPO? IPO is mainly done according to Grow for one of the following reasons: raise funds, give exit to existing investors, provide liquidity and marketability of shares, increase trust of stakeholders, employee motivation through ESOP sales, or enhance visibility, etc. etc. So why is Sula going through an IPO? Let's check. Sula plans to raise close to 960 crores from its upcoming IPO, and it has set the price range of its public offering between 340 and 357 per equity share. Interesting fact, according to its DHRP, as you can see on the image shown on the screen, Sula is offering close to 25.5 million equity shares in the IPO. And interestingly, all the 14 existing entities or shareholders are supplying the exact number of this 25.5 million shares to the new investors in the IPO. Hence, all of the money is used to give exit to its existing investors, which means the existing investors and even the promoter Rajiv do not feel the need to raise money to grow the business. They are raising money to reward themselves and exit the investments that they made in the last 15 to 20 years, which is perfectly fine too. The management and early investors are not optimistic about the company's path and wine business in India because they are exiting or diluting their holdings. In fact, Cofintra and Worley Invest are completely exiting their positions, while the rest of the 12 entities are partially but significantly diluting their positions in Sula. Money raised via IPO is coming not to grow the business but to give secondary exit to its existing shareholders. Company is generating more cash than needed or required, hence suggesting a lack in growth avenues. For example, they paid dividends close to 20 crore in 2022 and 9 crore in 2020. Hence, with all the points discussed, I don't believe this is the right time to invest in Sula Vineyards. Thank you so much for watching.